Kick us off? Sure.
Yeah, kick us off. Sure.
Hello, everyone. Thank you so much for joining Jet Closing, and Altos Research today. We're in for a big treat. I was able to bribe Mike, Mike Simonsen, the CEO of Altos Research, to give us an update and tell us, what the market's going to look like. He's going to talk about the national market as a whole, and as I've gone back and forth with him, that Vegas is a very different animal. He's going to zoom in for us into the Vegas market and tell us, how we're trending, what we look like, what we can look forward to this summer. Also, you guys probably have heard Altos Research because hopefully you all are receiving my weekly reports. If you're not, email me at kb@jetclosing.com and I will get you signed up. In that email, tell me what you want. I can send you Clark County. I can send you Las Vegas Paradise as a whole, the whole valley. I can send you Henderson, Boulder City. I can send you any individual zip code you want, anything you want. And I can send you as many reports as you like. Just let me know and I'll get you signed up and make sure those reports are coming to you. If you didn't write down my information, you can find me on our website at www.jetclosing.com. So with that, I'm going to turn it over to Mike Simonsen, CEO of Altos Research. Thanks, Mike.
All right, Christy, thank you. Let me get started here. So I'm Mike Simonsen, and my company is Altos Research. We track, for those of you who don't know Altos, we track the U.S. housing market, track every home for sale in the country every week. We bubble up the analytics for every zip code in the country, and we turn it into reports for realtors and brokers and other professionals, the companies like Jet Closing, to help you communicate with buyers and sellers. And when we talk about communicating, it's reaching new people, converting new prospects into leads, nurturing them over time, and giving them the information that they need to understand the market, make better decisions, and to work with you as a professional. And then when you're in the listing presentation, when you're in the actual active home search process or home selling process, using the data for the clients to make better decisions. And so what I'd like to do today is we'll look at the data for the country, the whole US. I'm going to start at the US and show how we talk about the country and what we should be looking for as the summer moves on. And then we'll dive into Nevada and Las Vegas in particular, and along the way, talk about how we talk about the data and hopefully share with you some insights about communicating with your clients and how you use the Altos product to reach more people and to work with them better. At the end, I've got some contact information. I've got Christy's information in there as well, so that you can reach her or reach us when you're done with the conversation. So let's start by looking at the national market. The fascinating thing about the real estate market in this country right now is we are at record low inventory. We're actually at record high prices. There are, in the whole country, there's only 719,000 single family homes for sale. 10,000 of those alone are in Nevada. And 2020 started the year at record low levels. And you can see in the chart here, each year it drops. For beginning of January, inventory obviously drops over Christmas and the fall, and then starting in about March, it climbs up week over week and peaks in the summer and then starts falling back down again. It's very cyclical, very seasonal, happens every year. This year, at the far right side of the chart here, you can see started climbing up in the beginning of March like normal, and then bam, each week, what's happened is there's more demand than new listings coming on the market. So more transactions are happening than listings are coming on. So our total inventory is actually falling week over week. And I can show you how. So in Nevada, there's some, and Las Vegas, there's some slightly different dynamics. But it's fascinating, and this restricted inventory is keeping a floor on pricing. It's actually holding prices up. So you have a reasonable amount of demand. You have inventory supply super tight, and therefore prices climb. Still falling week over week. There's a bunch of things that are happening here. One thing that we are going to keep in mind, and that we should all be keeping our eye on, is there are 4 million homes in the US in mortgage forbearance right now, in some stage of either not paying their mortgage or in permission to not pay their mortgage, and negotiated that. So these folks are either doing that because they've lost their jobs and need to do it, or some of them are doing it strategically. And so it is yet to be seen what happens to those homes when the forbearance process ends. Though those were originally 90-day deals. They were negotiated at the end of March, so therefore end of June. But there's a lot of sign to extend those. And we're also in the foreclosure moratorium right now, so that even if you're not paying your mortgage, you're not going into foreclosure, and therefore those homes are not coming to market. It's actually even homes that without the crisis would have been in the foreclosure process. There's thousands of them every week that would normally be happening, and those are not on the market right now. So there's a bunch of these things that are conspiring to keep inventory low, and that's impacting prices. At the national level, median home price is $345,000. It's up 1.5% over the peak of last year. Home prices peak at the end of June, and then they start receding a little bit in the fall as people need to do price cuts to move their homes before school season and before the holidays. You can see the blue line on the chart here. We're higher than we've ever been, and higher than last year at this time. The little dots on the chart are the year-over-year changes. The orange line here is an important number that Altos tracks, and that you can have access to in your Altos account. And this is the price of the newly listed cohort of homes. So each week, some homes get listed for sale. And what happens is you as agents and the sellers know in aggregate exactly where to price the home. Some homes are overpriced, some are underpriced, but in aggregate, they are, you know exactly where to price the homes, because you're looking around the market and you say, well, there's a lot of buyers at, we saw a lot of buyers at the last place down the block. We're going to price this one a little more aggressively. Or, that one's been hanging on the market. It's going to have to do a price cut. We're going to price this new one just a little bit lower. So this orange line responds very quickly. It is a leading indicator by 90 to 120 days of where the transaction prices are going to be. So the house comes on the market now. Maybe it does a price cut in July, it gets an offer in August, and it closes in September. But that's where it's coming on the market, right? This is the orange line, is where it's coming on the market right now. So the interesting thing about the data for the whole country right now is that orange line is rising week over week, rising strongly. That means that the homes that are getting listed for sale, the sellers and the listing agents are feeling that strength in the market. That means that's a leading indicator for prices holding up for the summer. So if you have buyers sitting on the sidelines waiting for bargains, waiting for coronavirus bargains, then this is one signal you can show them that it does not look like those bargains are coming super quickly, if they think that prices are tanking. So this is one to keep in mind. This is the price of the new listings. If I look at the demand side, this, some of the questions people want to know, like with all the unemployment right now, how can there possibly be demand for real estate? Well, there's a few things going on psychologically. We've shifted from, in a growth market, in a growth economy, real estate is aspirational. It is luxury. It is image. It is growth and grow the family. In a crisis moment, it's safety, and people are thinking about safety, and people are thinking about how do I create the nest. And you can see this demand in things like tracking the Google search numbers. This chart here is the trends of Google searches for buying a home and for real estate market. And if you look at the far right side of this chart right here, those terms, those search terms, real estate demand terms, spiked as soon as we started going into the lockdown. So we can also see this in demand. For example, when we send out the Altos reports that you get from Jet Closing, we send them out for our agents to their clients, to hundreds of thousands of people around the country every week. And we can see the views on our reports climbing, like they're at record levels. You can see things like virtual tours are at record levels. So the consumers are out there and they're in home buying mode. And this is also a function of millennials. So millennials are finally at an age where they can buy. Rates are low. And so if they are in a cohort of folks who are still stable with their employment, then they're still buying. And the millennials are also less afraid to transact during the COVID crisis scenario. So what that implies is that we've got buyer demand. We have tight supply, and that's keeping the prices up. In Las Vegas, unemployment is significantly higher than the rest of the country. In the national data, as we're looking at here, we have 15% unemployment. And the question is, how can we have 15% unemployment and yet have rising home prices? Well, it looks as though the people who are unemployed now were already mostly locked out of the real estate market. They weren't in a position to buy. We've had rising home prices for 9 years in a row. And so people who were driving Ubers or otherwise underemployed and are now unemployed were already out of the real estate market. Because we have record low inventory, the amount of people who can buy and because we have record cheap money, they can buy more. These are all the things conspiring to keep our rate, the prices higher. Here's another way to look at demand. This is percentage of homes on the market that have taken a price reduction. We use this number to understand demand because the traditional way to measure demand in real estate was how many houses sold, transaction volume. More houses sell, that's because more people wanted to buy houses. But we are in a supply constrained market. You can't measure demand via the transaction volume in a supply constrained market. There are too few homes on the market. There would be more sales if there were more homes available. So instead, we can look at price reductions. Here's what happens. About a third of homes nationally, about a third of homes get listed and then they take a price cut before they sell. Sometimes that's intentional, like that's a strategic decision. Sometimes that is accidental, or it's like a wacky client who has a a demand for their property, but they take price about a third, 35%. And it's this band, you have 28, 35, 40%. You can see the band here around the national numbers. When the market is hot, that means 35% of people were overpricing their homes, but there was enough, there were bidders, there was multiple offers, there was enough demand in the market that only 28 or 25% of them had to take a price cut. They sold faster than what the sellers were expecting. So you can see a few numbers here. So this is how the band works. Each year, we could start but seeing where the year is going to kick off by how many price reductions are in the first and second quarter, and then it starts climbing in the second quarter to peak in the third quarter, and then cycles around again. This year, at the far right side of the chart, you can see we wanted to start climbing like normal seasonality in March, and then boop, week over week, our price reductions are falling. So what this tells us is that the homes that are listed for sale are getting their offers. It's not there. If they were not getting offers and not moving, if there's no demand, those start cutting prices very quickly, and this price reduction number rises. But it's falling. So the homes on the market now are saying, we don't need to take a price cut. That means the transactions that happen in June, July, and August are from the demand that's happening now. And so this implies price strength through the whole summer. So again, for buyers who are thinking they're gonna wait on the sidelines for a bargain, the bargains don't seem to be materializing. Now, this totally took me by surprise. At weeks going into the crisis, our job was to look and to measure and to understand what was happening, and all of a sudden, like, the demand stays and prices are climbing. And so, this is a national number. 2020 started strong. Demand is outpacing supply, and I'm going to show you how Nevada and Las Vegas differ from here. One thing to notice on this one is for many years, we've been in this tight range of pretty high demand and tight supply. So price reductions have been staying low. In the second half of 2018, if you recall, interest rates started spiking. They started climbing. They were climbing at 5%, like the highest they'd been in many years. And you can see price reductions climbed in the fall. So if you remember the fall of 2018, there was a little bit of fear. The market is cooling. The home prices are falling. And then we started 2019 at a higher base. But rates fell all of last year to their current super low level. So that's why we started with good demand and good transactions at the beginning of 2020. Like, we started about as hot as you can start in a real estate market. That may have saved us. Some of those pieces are still coming into place. At Altos, you'll see this in your Altos report that you get from Jet Closing, or in an Altos report that you sign up for yourself to send to your clients. Sometimes people are afraid of the data. They don't know what to look for. And so at Altos, we have a simple number at a glance. And the fun way to approach this with your clients is to say, are you a big geek or a little geek? If you're a big geek, I got lots of data to send you, and you can look at all the data, you can interpret what's happening. Even if you're just a little geek, I'm going to send you this report every Monday, and I want you to look at one number. I want you to look at this market action index. While we have your house listed, this number is going to tell us what the market is doing. This number is at a glance to say, how's the market? So this works like a speedometer. The higher it goes, the hotter the market. Seller's condition below 30, there's a threshold, is buyer's conditions. That means inventory is climbing, demand is falling. Those conditions favor the buyer. The higher it goes, that means prices will be climbing in the future. So we are nationally and in a slight seller's market. This means just over 30. That means demand is sufficiently high that prices are going to be rising, and we've seen them rise. So this number is the market action index, which you can see in the chart below. So this is then taking the data and plotting it over time. The blue line here is the weekly number, and it kind of bounces around. And I highlighted it red here to show the immediate March adjustment down. We watched, boom, everybody pulled back out of the market, deep freeze. But then all of a sudden, April turns and people go, you know what? I still want to buy my house. And all of a sudden, April and May, the data starts climbing again. So this is demand relative to supply. This turns us into seller's conditions and has positioned us well for the summer. So it's another view, and it can be the easiest one. You don't have to think about percentages. It's just like, look at the speedometer. I'm going to put this in your inbox every week, or for your buyers, I'm going to put this in your inbox every week. If this number's rising, you might want to take action sooner, right? It's getting tighter for you. This for your sellers. If this number's falling while we have your house listed, that is the market giving us a signal that buyers are cooling off, and it might tell us that we want to get ahead of that, for example, and do a price reduction on your house. If this number is falling while we have your house listed, that's a signal that the market is giving us. Okay, let's switch to Nevada. So Nevada is always fascinating to me. It's much more volatile than the US as a whole. It rises faster in the hot times, it crashes faster as things cool off. So we started 2020 very strong in Nevada, dominated obviously by Las Vegas. And then we had, and we can see this in the blue line, so this is median home price in Nevada, jumped to its peak, its all-time peak, and was poised to have a really strong year up and to the right. March jumped down like everybody else in the country. But then here is the last several weeks of week over week home price climb in Nevada. You can see it continuing. And again, it's the same phenomenon we've had elsewhere in the country. It's just that March crashed faster, and the recovery is a little bit slower than the rest of the country. The most interesting thing on this chart to me is right here in 2018. 2018 started strong, and remember I mentioned interest rates spiked at the end of 2018, and you can see what happened to Nevada home prices in the face of that interest rate climb. Like Nevada, Las Vegas was very sensitive to more expensive money. So it is that. So you could see it adjust down. Then 2019 recovered a little bit, and 2020's buying season started very strongly. Now we're at ultra low rates. And that was triggering our demand and our home price climb this spring. One of the other things that's going to be interesting to keep our eye on for Las Vegas in particular, so rate sensitivity, but also lending standards. So there's a lot of evidence that banks are tightening their lending standards, higher down payments, the tighter terms, even though the rates are lower. So fewer people are going to be able to get loans. And that seems to be starting already. And is likely one of the things that is keeping prices in Nevada from appreciating too much right now, or as much as the rest of the country, because of the loan standards. Something to keep an eye on for understanding Las Vegas demand over the next year or so. The orange line is the new listings that I talked about. It's very bullish right now too. So this means that, you know, the listing agents and the sellers are aware of the demand out there and they're pricing into it. So that means like transaction prices in July and August are going to hold up. But this end of 2018 is the real telling thing about the Las Vegas data. If we look at inventory, so you can see that we started 2020 at record low, like everyone else in the country. And we've gone, we're horizontal in transaction volume. So transactions are keeping up with the new listings. In the rest of in the country as a whole, the transactions are outpacing new listings. So inventory is actually shrinking each week. But right now it's horizontal in Nevada. The key here is if we see the distress sales, they would start to come, the listings would start to come at the end of June. However, distress sales are very different for this time than they were if you were around 12 years ago in the big crisis, the big mortgage crisis. The difference is now that we have far more equity, sellers have far more equity than they did at the time 12 years ago. So they have far more equity, inventory is super low, demand is reasonably high. That means if I can't make my mortgage, I don't walk away from the house like I did 12 years ago. I just sell it, right? Worst case scenario is I sell my house and I take my cash. It seems to us unlikely that there's going to be a big wave of like foreclosure sales or short sales to happen. Unless we get a protracted state of home prices dropping and therefore equity being eroded. And if you're upside down on your house, you're not selling it. So, but we will see those listings start to happen in the inventory number first, very quickly. But I don't expect between the forbearance process and the foreclosure moratorium that's on right now, is that even if you're not making your mortgage payment, you're not foreclosing. So those houses are not coming to the market. I don't know how we get out of that, how we transition back into normal mode and what happens then. But in the immediate term, it looks like we're gonna have a cap on our inventory through, and we're really, we're 25% fewer homes for sale than last year at this time. And like, that's a big deal. So because buyers have that much less option. So there's a lot of room for sellers to come on and recover those, get their prices up. So it seems to me like we are less likely to have a panic crisis mode than we were last time around. And then let's look at price reductions because it's the other place where we will see that happening. You'll see the demand. So this is Nevada's price reduction cycle. Really interesting compared to the national cycle. No, remember the national cycle is this pretty smooth line and curves up and down each year. And you can see the same seasonal curves that happen each year. What's interesting is that in 2018, remember, interest rates are climbing, and you see it in the price reductions. They start climbing. We moved out of hot market into a market that's cooling off. So then price reductions are over 40%. In a really scary market, that number is over 50%. Like half of the stock has taken a price cut recently before they sell. That's when you know that prices are adjusting down and your sellers should get out quickly and your buyers are looking for bargains. So, and you can see it in there. Where we are now at the right end of this chart is at under 30%. That is strong. That means that, There's enough demand there. There's enough offers happening that sellers don't feel compelled to cut their prices to move the house. Even if 35% of them did, only 29% of them have to do so. So stronger than last year at this time. And you can see, this spring, like I said, we started off super hot. That number was plummeting. We were coming down, and so, but we just, we are in that stasis mode, and so that bodes well for transaction prices in July and August because, there's enough demand out there now, and that the buyers are searching and they're looking and they're shopping, and therefore, they're going to make offers. So that's what we're looking for. So that's Nevada percent of properties with price reductions. Okay, let's switch into live data, and let's switch into for Las Vegas. Let me stop share there, and I'm going to screen share here. And let's see here, and I'm going to do a screen share there. Okay. All right. So this is an Altos report for Las Vegas. You will get this version from Christy with Jet Closing. This one's branded for me. And when agents subscribe to Altos, we put your brand on it, and so that you can distribute it to your clients. Here's the market action index that I mentioned. So we are in a seller's advantage market. It's down a little bit because at the beginning of the crisis adjusted down, and we saw that big dip. It climbs back up. Las Vegas has not climbed up as aggressively as the rest of the country, but we're still in seller's conditions. We saw it all the way through that data. The Altos reports have all the data. This is right now, this week data. There's a little, we call them spark lines, and you can see the trend over time. So last few months, you can see where, beginning of March was our peak, and then prices have adjusted down rapidly, and then are holding steady through April and May. You can see what's happening with inventory, and this is city of Las Vegas proper. In the Altos reports, you can look at the data here. We can just zoom in. Let's zoom in just to the last few months, and you click on here and zoom in, and then you can see to your buyers, home prices are holding steady. Things are not falling in Las Vegas. We definitely had our reset down in March, but for city of Las Vegas, home prices are not falling right now. We can dive in. We talked about the price decrease number, so we can zoom in here and look. We had our 2017 price reductions very low. 2018, as interest rates climbed, so did price reductions. And this spring, we are starting hot again. We're in a nice, strong market here, and this bodes well for your sellers. What's going to happen in the next few months. So we can do that. You can change the stats in your Altos reports, and you can dive in. The other thing I love to point out about the Altos reports is we do every market in price range segments. So the high end of the market may be behaving very differently from the low end. And Las Vegas is really interesting because really you can see the demand is in the middle. You can see the demand, 150 days at the high end, over 100 days at the low end, but in the middle, 85 days. This is days on market. You can tell what kind of property it is, so you can say to your buyer, I know that you see that the house down the street was on for 6 months, but in your price range, things are going much quicker than that. Your price range here at 400K, they're much quicker than that. And if you want to get this house, we need to make an offer. So you use the price range segments to communicate to your buyers and sellers in the slice of the market that they are in. And so all of Altos, so this is Las Vegas, but you can search for any zip code. This is why Christy can send you any zip code. You just click here. If you're if your buyers and sellers or your prospects use this search box, they will search for, Henderson, and they can get Henderson, Nevada. They can get any, let's scroll down to the Nevada ones. They can get any zip code. They can dive in and see the data. And if they're not already your lead, a lead conversion form pops up. So one of the ways you use Altos is to convert new leads. So when your clients send this to their friend or their cousin and they say, hey, look at what's happening in Henderson, that friend now becomes a lead that converts to you in your Altos account. So that's the local data. And so you can see how we went from national to Nevada and into the local Vegas area. We can see that we have lots of similar action where Las Vegas has adjusted down, is not skyrocketing and not super strong like the rest of the country, but all the signals are that it's holding up nicely. Transaction volume, demand, prices to hold up through the summer, all the leading indicators keeping us bullish for the rest of the summer. We do have to, as I mentioned, we do have to keep our eye on the distressed sales and the properties that are underwater. We have to keep our eye on what's happening with the mortgage forbearance process, and we have to for listing and selling, those people may be options. They need your help as those programs start to expire. So you'd be wise to keep an eye on that in your local market. Some of the other things in the back end of the Altos system that you probably haven't seen. So the data is important. It's important for us to understand. It's important for our clients, our prospects, our sphere to understand. Helps them make good decisions, helps them know when to take action. And especially when we're in a fear-based market, information is the antidote to the fear. Altos, what our system will do is email to your contacts every week the data, or every week, every month. And it's a nice custom email and it's branded for you. You get to look into your Altos account and see which of your contacts are using the data, which are viewing the reports, and it allows you to be the expert for them. It's also powerful for reaching people on social media. So you need to have something to post, and posting, here's the latest data for Henderson this week. You might be surprised at what's happening. You post that, it shares your Altos report, it converts leads because they search. And likewise, you can do like one-click Facebook ads, so that if you need to if you're in the market to drive traffic, drive new leads to your business, market data is powerful because everybody needs it. It's super insightful. It's always fresh, so it's like you don't have to worry about it. Like there's always a new meaning in there. And so, and as I showed you in some of the Google searches, people care. Like they want to know what's going on. So super powerful way to do that. Okay, let's summarize and wrap it up here. Supply is still low and it's supporting our home values. We know, we watched the new listings cohort, which you can get, you can do that for any of your markets, and you keep an eye on that. You can look at the price reductions in the Altos data, and so you know when when the market is starting to sense demand weakness or demand strength, you see it in the price reductions. And you could use that for yourself, but you also use that for your clients. And then the at a glance, your market action index. Like I want you to look at one number. So I very quickly wanted to show you how sharing the data helps your clients in your sphere. It helps you reach more people. It helps you keep them engaged. And that you can also obviously work with Christy and Jet Closing to get your reports, or you can come to Altos directly. And if you want to do the deep data expertise, we can do that. I have a couple of links for you. Here's Christy's email. If you don't get the reports that you'd like, you can get that zip code, city, national. We do at Altos Research, if you want to look into things like, hey, I want to be able to do the advanced stuff, I want to be able to convert leads for mine, you would have to come to Altos and convert to and create an Altos account. We do have a coupon right now. So if for those of you who are clients of Christie's and you want to sign up for an Altos account, we have a free, first month's free. You just use the coupon code JETCLOSING when you sign up, and you get 100% off your first month. So and you get all the data, and you get to know that Christy gave you a good deal for that. So just go to altosresearch.com. We'll do a free strategy session. So Jeff Graves on our team, or Jessica, one of the strategists on our team, will walk you through how you can use all this in your business. You can spend more time with the data. You can dive into your local zip code, lots of things that you might want to do. We do videos every week on our YouTube channel. So go there and subscribe to those if you want to get a quick view of like what's happening in the national market. Drop us a line anytime, we can help. And so I'm going to wrap it up there. And let's see, if you have further questions, reach out to Christy or myself or Altos, and we'd love to share more, get you more information, and help you build your business. Okay,